Well, let's just start now. Let's talk about the IRS Form 940 line by line instructions. How to file federal unemployment taxes. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's show, I want to give you Form 940 line by line instructions and kind of show you how to file federal unemployment taxes. And one of your responsibilities as an employer, right, is to pay unemployment taxes so that your employees may have unemployment benefits if they are terminated from employment. And employment insurance taxes are collected by the IRS and by states, who then distribute unemployment benefits to former employees. It's sort of like some kind of social protection program, right? So what is that form? What is the Form IRS 940? Businesses with employees file IRS Form 940 to report their obligations under FUTA. So that's the Federal Unemployment Tax Act. And Form 940 actually shows, if you look at it, it shows the amount of federal unemployment taxes that the employer owed the previous year, how much has already been paid, and the outstanding balance. And the form every year, you gotta send this by January 31st or February 10 for businesses that have already deposited their unemployment taxes in full. So businesses with employees are responsible for paying unemployment taxes. This is just the law. And this taxes, as I said earlier, fund actually the benefits for the unemployment benefits for people who lose their jobs. So unlike other taxes, these taxes are not withheld from employees' wages. No, the employer alone is responsible for paying unemployment taxes and reporting them on IRS Form 940. So small business owners often find this form confusing. So I'm going to break it down. I'm going to break everything down today. And the reason why it is confusing is that along with the federal government, states levy unemployment taxes through the State Unemployment Tax Act, the FUTA. So state unemployment taxes actually affect your federal tax liability. So it's kind of important here that you understand both FUTA and SUTA pretty well in order to file Form 940. So who pays unemployment taxes? I already said that. It's businesses. And businesses pay the tax based on the gross pay of employees each payday. So employees do not have to pay that. So your business will need to set aside an amount each payday and pay the tax when due. And you must submit an annual report on the amounts of unemployment tax due and paid. And that report is a Form 940. So you must report your future tax liability by filing the form. But one thing that's very important is that you only file it if you paid. So you have to actually, if you answer yes to one of both of these questions, then you have to pay FUTA taxes. Did you pay $1,500 or more in wages to employees during any calendar year quarter of the current year or previous year? Did you employ one or more individuals for at least some part of a day in any 20 or more different weeks in the current year or previous years? So if you actually, when determining whether you fall into either of these categories, you should count all full-time, part-time, and temporary employees. So basically, anyone who receives a W-2 form should be included. And this includes the owner's salary if you have a corporation or LLC. And before I want to say that you should never count 1099 independent contractors or business partners in a partnership. So how and when do you have to pay unemployment taxes? This is an important element. So you got to pay this. You have to actually pay this by January 31st. I already said that. So if the amount, Form 940 is due by January 31st each year. If the amount of federal unemployment tax due for the year has been paid, Form 940 can be sent by February 10. In other words, once you already pay the authorities, they're fine. You can just mail the form 10 days after January 31st. And the thing here is that paying FUTA taxes and reporting them on 940 is fairly straightforward. It's not complicated, and that's if you understand how states and federal payments work together. If you have any question by FUTA taxes or how state unemployment taxes affects your FUTA tax payment, it's just best to reach out to an advisor because every state is different. You can reach out to a payroll service, a professional employer organization, a tax advisor, a CPA, and EA, right? Because the thing is that these people understand pretty well what goes on in your state, in the states where you live, and basically they can also simplify and automate tax filing so you can focus more energy on running your business. And so how do you file and when do you file Form 40? January 31st, of course. And if January 31st happens to fall on a weekend, then it's the next business day. One thing I want to mention here is that businesses that owe $500 or less in FUTA taxes can pay their taxes when filing Form 940. However, companies that owe more than $500 must pay their FUTA taxes on a quarterly schedule. So if your FUTA tax is $500 or less in a quarter, you can roll it over to the next quarter, no problem. So you want to continue rolling over your tax liability until the cumulative tax is more than $500. So at that point, you must deposit your tax for the quarter by the following due dates. So if the cumulative tax is more than $500 on March 31st, deposit by April 30th. If it's June 30th, you want to deposit by July 31st. If it's September 30th, you want to deposit by October 31st. And if it's December 31st, you want to deposit by January 31st. One thing that's very important here to understand is that people always say that Form 940 is a federal form. Yes, so it's linked to FUTA. Now, there is a correlation, as I've said earlier, between federal unemployment taxes and state unemployment taxes. So the standard FUTA tax rate is 6% on the first $7,000 of an employee's wages subject to FUTA tax. So this 6% is then reduced by up to 5.4% to give a credit to the states where you do business for the state's unemployment taxes. So the federal FUTA tax after the credit is applied is really 0.6%. So 6% minus 5.4% equals 0.6%. So generally, you are entitled to the maximum state credit if you paid your state unemployment taxes in full on time and the state is not determined to be a credit reduction state. So because some states are. So some states take out loans against their federal FUTA tax credit. So if a state does not repay these loans in a timely manner, their FUTA tax credit is reduced. Let me give you an example. Just kind of break it down for you. Let's say a state might have a credit reduction of 0.3%, which means what? That businesses in the state would only get a FUTA credit of 5.1%, and they must pay the additional 0.3% to get to the 6% FUTA tax rate. Remember, you have 0.6% for federal and 5.4% to the state. Okay, so if the credit is only 5.1%, you got to pay the 0.3% extra. So at present, the only credit reduction state is the U.S. Virgin Islands. All right, and the confusing part, really, folks, is that states can have their own rules for which businesses have to pay SUTA taxes. And if you do have to pay taxes, your state could have a very different payment schedule, different payment deadlines, and different reporting forms. So you really want to sort of contact a local CPA or a local tax attorney to really explain things for you. Of course, SUTA tax rates vary significantly by states, right? So the tax rate could be as low as 0.05% or as high as 14%, depending on the states. So most states set a lower new employer rate to encourage startups and then increase the rate from there based on your company's turnover and employment history. So I'm showing you right now on the screen, we have a very nice picture. The credit is the tax foundation, very, very strong, and it kind of shows you how your state ranks on unemployment insurance taxes. And you can see from the low to the high. And this picture is courtesy of the tax foundation. And this was as of 2019. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still having a conversation to you today about IRS Form 940, and I'm going to give you line-by-line instructions. But before we continue here, I just want to quickly say a few more things. What are wages that are included in FUTA tax calculation? So the IRS basically says that FUTA taxes are calculated on employee wages. Now, the word wages is kind of vague, right? So FUTA tax calculations are most payments to employees, but there are many exceptions. So mileage reimbursements, insurance premiums, and other fringe benefits are not included in FUTA tax. So before you actually run your calculation, check to make sure you are including and excluding the correct payment. And you can actually go to the IRS websites, and they have something called Publications 15 and 15-A that give you more info about that. And in some states, one thing we have found in our research is that the wages that are subject to state unemployment tax are very different from wages subject to FUTA tax. And some states exclude some types of wages from FUTA tax. For example, wages paid to corporate officers, certain payments of sick pay by unions, and certain fringe benefits are excluded. So in these cases, you may have to deposit more than the 0.6% FUTA tax. And there are some special Form 940 rules also that you need to be aware of. So certain types of businesses face special rules for filing 940. So if you are in one of those industries, you want to pay attention. So individuals with household employees such as nannies or maids must pay FUTA taxes only if they pay $1,000 or more in wages in one calendar quarter. But instead of filing Form 940, you would file Schedule H along with your personal income tax return. And agricultural employers must also pay FUTA taxes and file Form 940 if they paid $20,000 or more in wages to employees during any quarter in the current or previous calendar year. Alternatively, you also have to file if you employed 10 or more farm workers during some part of the day in the current or previous calendar year. All right. Now, what about family-owned businesses? Now, those have special rules in terms of which wages are subject to FUTA taxes. So you don't have to include wages of children under the age of 21. However, you should include other older children as well as spouses if your business is structured as a corporation or partnership. And another special Form 940 rule is that educational, religious, or charitable institutions and other nonprofits organizations that aren't subject to taxation under Section 501c3 of the Federal Tax Code, those don't have to pay FUTA taxes at all, and they don't have to file Form 940. So speaking about paying FUTA taxes, how do you do that? You may need to pay your annual FUTA tax in one or more deposits during the year. I think I already said that, and because this depends on the amount you owe. So you want to check the amount you owe for FUTA taxes before the end of each quarter. So this is very important. And if your total FUTA tax liability for the year is $500 or less, you can pay by deposit or with your Form 940 by January 31st. You must make FUTA taxes electronically, folks. You can do that using the EFTPS, the Electronic Federal Tax Payment System. You can pay your FUTA taxes on the EFTPS, but you also can keep track of your payments because you'll need them to complete your Form 940 correctly. Your Form 940 can be filed on paper or e-filed if you use a tax preparer. And what do you actually need to complete your Form 940? So completing Form 940 is a really, really straightforward process. Once you have gathered the information required, everything is fine. The only part that might be not clear is the sections relating to the interaction between state unemployment taxes and the federal unemployment program. I'll break things down for you right now. So information you need your EIN, your employer identification number, your name, the trade name, the address of your company. So you need total payments to all employees for the calendar year, payments exempt from FUTA tax and categories, very important. And you need some kind of information to determine the adjustments that need to be made, right? So you got to understand that taxable FUTA wages, some taxable FUTA wages are excluded from state unemployment tax. So you need to have some kind of schedule to reconcile those two elements and know exactly where you stand. So this is really it, folks. Now I'm going to show you how to fill out Form 940 step by step. All right. There are basically 7 parts to IRS Form 940. So most sections of this form are pretty straightforward. So we're showing you on the screen right now. I'm going to walk you through everything step by step. All right. So as you can see here, we have so the form is there. So you put your EIN, your name, you have the trade name, the address. That's pretty straightforward. And you need to, if you look at on your right, you need to specify the type of return. So whether it's amended, whether we have a successor employer, no payments to employees in 2020, or final, if the business closed or stopped paying wages, you need to specify that. So you need to check all that apply, not just one. And in part 1, you need to tell the IRS about your return. So if you had to pay state unemployment tax in one state only, you need to put the state abbreviation. If you had to pay state unemployment in more than one state, you are a multi-state employer. And if you paid wages in a state that is subject to credit reduction, you need to specify that. And in part 2, you need to determine your FUTA tax before adjustments. So if any line does not apply, leave it blank. So you need to put total payment to employees, payment exempt from FUTA tax. And so here you need to check all that apply, right? Fringe benefits, group term life insurance, retirement pension, the dependent care, and other. And if you made total payments to each employee in excess of $7,000, you need to put that there. And the rest is pretty straightforward. One thing I want you to really, I want to talk about here is the notion of multi-state employers versus credit reduction states. So if you have employees who live in one state but work in another, you will need to follow the Department of Labor's multi-state employer test to figure out which states suit the taxes to pay, right? So you have localization, where the employee performs the job, base of operation, where the employee receives instructions and next assignments, place of control, the state from which the management and control over the employee originate, and residence, where the employee lives and performs some services. And so this is kind of cool. So the part 2 here, so part 1 is pretty clear. Part 2, I think we already spoke about that too here. And then we have part 3. So part 3 you can see on the screen right now. Basically, part 3 on the screen right now. Oh, I'll speak about part 3 right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still giving you a line-by-line instructions on Form 940, and I want to jump right now into Part 3. So Part 3 basically accounts for any adjustment in your FUTA tax liability and as a result of paying state unemployment taxes, right? So if you paid state unemployment taxes late, or if any of the wages you paid to employees were exempt from state unemployment taxes, you'll need to pay a higher than normal share of FUTA taxes. And this is actually to prevent an employer from getting a windfall simply because the states they live in levies lower unemployment taxes. All right. Remember, if you are in a credit reduction state, you will also pay higher FUTA taxes. So for businesses in a credit reduction state, you need to enter the total from Schedule A onto line 11 on Form 940. So you can see here on the screen here, we have Part 3. So line 9, you need to fill that. And line 10, you also need to fit that. And if line 11, if credit reduction applies, also specify that. And Part 4. Now, Part 4 is a way to determine your FUTA tax and balance due or overpayment. So if any line does not apply here, please leave it blank. Do not complicate things, because Part 4 is basically where you calculate your total FUTA tax liability on line 12, right? And whether you have an outstanding balance, line 14, and in line 13, you need to note any taxes that you have already deposited for the year. In the balance on line 14, after those deposits, if the balance happens to be above $500 or less, you can pay the tax along with filing Form 940. There is a payment voucher included with Form 940 for your convenience, or you can even pay online if you are e-filing. So if the balance after the deposit is more than $500, you have to deposit your tax separately according to the IRS's quarterly schedule. And if you are a quarterly depositor and overpaid your FUTA taxes, indicate at line 15 how you wish to receive your money back. This is very important. And we also have a line, part 5, and I'm showing you right now on the screen here. We have part 5. So if the amount of FUTA taxes that you owe is greater than $500, you must actually break down your balance quarter by quarter in part 5. And the total on line 17, you add up to each quarter should equal the total tax liability on line 12. So I'm still showing you on the screen. Now we have part 6. So part 6 is basically where you are actually authorizing your accountant, employee, or another third party to discuss this filing with the IRS. So you have to, if you say yes, so you have the opportunity to say yes or no. And if you say yes, you need to include the name and phone number of the designees. So the designees is really the person whom you have assigned the responsibility of talking to the IRS to. And you also need to have some kind of encryption, right? So you need to select a 5-digit personal identification number, a PIN, to use when talking to the IRS. That way you know that your designee knows that PIN code and can contact the IRS and talk about the Form 940 or other companies' tax matters with that designee. It's very important. And in part 7, you just need to sign. You sign your name, you print your name, you print your title, you put the dates, and you put the best time to contact you, just if the IRS wants to contact you. Very important. And if you have a paid preparer, if you have paid a company or someone else to prepare the Form 940 for you, you need to specify that here. And you need to, for the paid preparer, you need to check the box where it says check if you are self-employed. So you need to tell the IRS if you are working for a company or if you're self-employed. Very important. And so that's for part 7. And then at the bottom here, you also have a voucher. So if you want to pay your FUTA tax manually, if you will, by through paper checks, so you can actually detach the voucher and mail your payments in Form 940. You can see on the screen right now the Form 940V. So this is basically a voucher that you have to add. Of course, you have to. Don't forget to enter your employer identification number, because that's the only way the IRS can actually credit your account accordingly, right? So don't forget that part. So you enter the amount of your payment, and you enter your business name on the voucher, you enter your address, you enter your city, state, and zip code, and you just put all the other information. All right, folks. This is it for today's conversation. I was just talking to you about IRS Form 940. I was giving you line-by-line instructions and how to file federal unemployment taxes. So I spoke to you about who pays unemployment taxes, who has to file IRS Form 940, how and when to pay unemployment taxes, when and how to file Form 940, Form 940 and state unemployment taxes, wages included in FUTA tax calculation, special Form 940 rules, paying FUTA taxes, what you will need to complete Form 940, and how to fill out Form 940 step by step. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.